Hello and welcome. You have tuned into Buy Now Sell Now, and apart from that, there are so many earnings that have been trickling in, and let's put the spotlight on LIC Housing Finance. And to know more about the growth outlook going ahead, let me welcome Mr. Tribhuwan Adhikari, who is the MD and CEO of the company. A very good morning and thank you so much for your time. Firstly, let's talk about your credit cost. In your numbers, that have remained at least 5 to 10 basis point higher in H1 compared to your full year guidance. What's causing this? Give us more sense, firstly.
Well, yes, yeah, the credit costs at the end of in the second quarter were about 5 basis points, and in the first quarter they were about 6 basis points. For the year last year, they were at 9 basis points. Nothing unusual because overall the asset quality has been improving. We've been doing well in that. So we had given a guidance of maintaining credit costs within 15% for the year. I'm pretty sure we are on target to do that. We expect quarter threes and quarter fours to be much better in terms of credit cost as compared to Q1 and Q2. So I'm not worried on that count. I think we are within the range we had suggested. And I'm pretty optimistic that we will be maintaining that guideline of containing credit costs within 15%.
Sure, Mr. Adhikari. Now, while you are maintaining the 15 bips credit cost guidance for FY26, what will be the key levers behind this?
Well, our asset quality has been improving quarter and quarter for the past 2 years. We've been doing well. This quarter also, our GNP ratio has come down. There's a reduction by almost about, I think, 8 or 10 basis points. So we feel in the coming quarters, of course, if you analyze our the stage 3 defaults, most of these are legacy loans, old loans given in the years 2016 to 2019. And now whatever is left are the big construction finance loans. They are all at various stages of resolution. And we are hopeful of one or two big resolutions in Q3 and Q4, very close to, let me say, cracking them. So I expect that to contribute to the reduced credit costs in the coming quarters.
But along with that, what's the growth outlook? Now with the rate cuts, can it surprise on the upside? What is your sense?
Well, rate cuts of 100 basis points have already been percolated down. We have also cut our rates both on the new lendings as well as the existing book also. And assuming that they remain as they are, we have given a guidance of double-digit growth. Right now, we are at approximately 6%. Right. So yes, Q2 has been slightly muted, if I may use the word. Had been slightly muted. Expected a slightly better performance in Q2, partly or largely driven by our, I would say, slightly disappointing performance in the project loan front, in the construction finance front, where we showed a heavy negative. The retail is doing reasonably well. But Q3 and Q4 traditionally are excellent quarters for us, and that is where we get most of our growth from. So going forward in these 2 quarters, we expect this growth to further consolidate, and we are hopeful of touching this guided figure of double-digit growth, which we had given in the beginning of the year.
Let's talk about the margins. Can you give us a sense on the trajectory we can expect and what are the triggers out here?
Well, right now the margins are at what, 2.62, right? If I remember correctly, they're at 2.62. They have compressed by about 6 basis points over last quarter. As compared to last year, of course, the compression is slightly more. And it was expected because the rate cuts happened in the month of Feb and April. So quite naturally, we had to pass down these rates. There was a 25 basis point cut on our entire lending book, which we had taken. Part of that, 1/3 of our book was repriced from the month of April, and 2/3 of the book, because they were at quarterly resets, were repriced from the month of July. So the hit was taken majorly in the second quarter, which we are reporting on right now. So there was a compression of 6 basis points. But as far as NIMs are concerned, I think we are at the bottom of the expected NIM range. In the beginning of the year only, we are given a guidance of a NIM will be of maintaining a NIM of 2.6 to 2.8. We're right now at 2.62. I think we have hit the bottom. We're not going to go down any further. So I am pretty sure that the guidance which we had given at the beginning of the year of 2.62, of being in the range of 2.6 to 2.8, will be maintained by the time we end the financial year.
All right, Mr. Adhikari, you said that 1/3 of your loan book is repriced on a monthly basis. Take us through what is yet to be repriced.
What I said was that we had this rate cut of 25 basis points on our entire loan book in the month of April. Now, 1/3 of my book is on monthly reset. That means the rate gets reset immediately on repricing. And the remaining 2/3 of my book is on quarterly reset. That means it gets repriced at the beginning of the next quarter. So the repricing is complete, 100% complete on 100% of the loans. The only thing is that 2/3 of the book got repriced from the 1st of July. So this quarter, we took I would say, the major part of the hit in interest income, and also the NIMs took part in the second quarter, which we are reporting on. The entire book has been repriced. There is nothing left to reprice.
All right. With that, thank you so much, Mr. Adhikari, for being on the show and answering all of our questions. Thank you so much for participating. And we'll slip into a short break, but post that, we'll be joined by Satin Credit Management to talk more on their Q2 numbers. Where definitely we saw healthy profit and stable asset quality. But then let's talk more on this. We are joined by Mr. H.P. Singh, Chairman and Managing Director, Satin Creditcare Network. Mr. Singh, good morning. Welcome to the show. Let's talk about the margins. What, according to you, is the outlook with regards to margins, and are interest reversals happening? What's going to be your take on this?
So the margins are stable. In fact, the margins have increased this quarter as compared to the last quarter. And we feel that the margins will remain stable in the coming quarters also. As per the interest reversals, I don't think so. I think, we are getting, our write-backs, from this thing. I think, that is the only thing, which we are probably looking at. We technically are looking at NIMs as well as, the write-backs, which we will have technically from our write-off pool, which is closer to about 15 crore for the half year as such.
All right. Hi, morning, Mr. Singh. This is Shrishti also joining in. But give us some sense that when does the growth is expected to rebound significantly for you? How do you see the growth in terms of the trajectory, say, in the next 2 to 3 years?
I think if you look at it, we've had a growth of about 8% year on year. In fact, if you look at the entire industry, it is not growing. In fact, it is degrowing, Looking at that landscape, I think, for us to do a 8% year on year growth is pretty significant and positive. Looking at it from a 2-year to a 3-year standpoint, I think, for us, it's not a guidance, but I think, for us, an average growth of about 10 to 15% is what the range which we will look at for the forthcoming years as we go on from this year trajectory of about 8% as of now, and then looking at probably between a band of about 10 to 15% is what the growth rate would be for the next 2-3 years.
Let's also talk about the asset quality. So far, it remains stable, but then what are the challenges that you're facing currently?
See, our asset quality, in fact, has been one of the best in the entire industry. If I look at it, for us, the GNPAs have, in fact, dropped down from about 3.74% in the first quarter to about 3.52%. Having said that, our credit cost has also been on a YOY basis, I think it's down from 5.11% to about 4.88%, YOY, at this particular moment. For us, the asset quality will keep on, we are working on it. And in fact, if you look at it, looking at the growth as well as the asset quality, I think our asset quality will probably also improve from here. How much is something, which we are already probably said it earlier, that our credit cost would be lesser than what the credit cost was there for the last year. Last year, the credit cost was about 4.6%. In fact, we're looking at significantly moving it down across over there. And we've seen these run-ups of the downside coming in as compared to the YOY figures which are coming in.
All right, but along with that, Mr. Singh, how is the collection efficiency panning out?
If you look at our ex-bucket collection efficiency, it is stable again at 99.5%. I think it's been hovering between 99.5 to about 99.7. I think this will hold on. In fact, first half technically is supposed to be a muted half because of again heat wave, rains, monsoons, and everything. Probably looking at the second half how it's going to come in. I think it's going to be positive from there. Collection efficiency of X bucket, as what he said, is going to be stable. In fact, might improve a little bit. So that is how we are looking at our collection efficiency moving onward from here.
All right, but then what is the outlook with regards to where Karnataka as a state is concerned for you?
We have a very small portfolio over there in Karnataka, so I think it doesn't affect us in any which ways. I think we are probably hovering around about 50 odd crores, which is our portfolio quality in our AUM of close to about 11,000 crore. So nothing significant. In fact, if you look at it within that 50 crores, also I think it's performing reasonably okay as compared to the overall asset quality of the complete company as such in totality. So nothing of significance to us.
All right, but lastly, Mr. Singh, how are the slippages behaving at this point in time, and when do you expect recovery to start to play out?
See, for us, the recovery has already started panning out. If you look at it, that's the reason why I said my credit cost YOY, the quarter of 25 as compared to the quarter of 26, has dipped down from 5.11% to about 4.8. Now, that's a significant dip, of about 30-40 basis point, And if I look at it further from here, I think for us, recovery has already started. What we are looking at is how do we improve our asset quality from here on. And as I told you, we are looking at bringing down our credit cost significantly from what it was last year. And we are very hopeful that we'll be able to achieve that.
All right, Mr. Singh, that will be all. Thank you so much for talking to us and helping us understand the results better. Thank you. But then moving on and focusing on Vodafone Idea. Now, Vodafone Idea shares crash as fine print of Supreme Court order on AGR dues raised fresh concern. Our colleague Mansi Dave joins us with more details. Mansi?
Well, Vodafone Idea is in focus radar today as the AGR crisis are something which is to be taken care of, and taking a quick look and taking a quick glance at what the situation is. It's a partial relief for Vodafone Idea as AGR dues stand at 83,400 crore with total liability including spectrum penalties and interest nearing 2 trillion rupees. A fresh demand of 9,450 crore for FY18 to 19 has been challenged by the company in the Supreme Court of India. Vodafone Idea has warned that it may not survive beyond FY26 without relief or funding. Having said so, the shares did plunge over 5% after the fine print of the Supreme Court order, which has been surpassed. Government views further equity conversion as off limits because relief is unlikely to be extended. And if we take the view of the court says that the government now is holding a 49% stake in Vodafone Idea. So some solution here is required. Supreme Court did stress there has to be some finality to the litigation. Having said so, if we talk about the key implications and understanding the overall picture, the financial risks are many. Massive dues plus weak cash flow makes survival quite uncertain for the company. Sector's health, Vodafone Idea did collapse, could reduce competition, hitting consumers. The policy leverage is big. The government must decide between bailout or letting market play out, and the relief overall, taking a glance, is not guaranteed, so the stock remains at high risk. So Vodafone Idea, just a partial relief, and it's still at a high risk.
All right, thank you so much, Mansi, for getting us all those details. But moving on, and it's the big...
Good morning, sir. How are you doing today?
Yeah, I'm doing good.
Thank you so much for sending us your question. Yeah, please go on.
Yeah, this is regarding Niva Bupa Health Insurance Company. They have reported good business growth in terms of the gross premiums written in the past few periods. But the profit after tax has fallen deeply to negative 91 crores in Q1 FY26.
Right,
Whereas,
sir.
Yeah, the management has management said that their financials actually truly reflect the IRFS method rather than IGAP.
Okay.
Yeah, under IGAP, they have recorded a negative profit of 91 crores, whereas under IFRS, they have a PAT of 71 crores.
Right. Sir, do you have position in this counter?
Yeah.
What's the buying price?
It's about 83
Okay.
rupees
And
per share.
you plan to stay invested till what time?
Yeah, I'm a long-term investor.
Sure. Okay.
So considering this, what is the intrinsic value of the company despite this number game?
Okay.
And how does it compare with others?
Sure.
And this one-on accounting, is it really going to damage the future of the company?
Sure. Let's just get the analysis. Sharmila, would you like to take this one?
I'm afraid I have not studied the company as deeply as the investor seems to have. But straight up, I can tell him that in comparison with the other life insurance companies, this doesn't stand up too well. Having said that, I think given the way their AUMs are growing, as well as the general sort of feedback on the business, I think this would be a wrong price to sell at. I think a realistic target that maybe the investor can have in mind could be around 90 rupees. He would have to keep a little bit of patience given the fact that the numbers have not been that great to see that recovery. But honestly, I think some of the other life insurance companies are better. I think SBI Life reported a very good set of numbers where their value of new business, which is an important parameter for insurance companies, was fairly healthy. So maybe he could look to shift to that once he gets sort of a 90 rupees price on Niva Bupa.
All right, so that's the take coming in on Niva Bupa. Let's watch out for that. But thank you so much for taking the time out and calling us. But let's move on. And there are so many other queries that have been trickling in, and so many SMS queries as well. And the first query that I have through SMS is coming in on SBI. Lakshmikant, what's your take coming in on SBI, wherein Ekambara has been holding 100 shares, buy price is 780 rupees. Would you suggest to take out the profits of SBI at this point in time, or hold on for some more time as well?
Good morning to both of you. So looking at the chart of SBI, so SBI is trending higher, and the target which we have given even in this show, that all has achieved. But still SBI has not made any reversal kind of pattern on both daily and weekly chart. So I think she can trail her stop loss toward the levels of 905. So that would be the firm support for the SBI. And from here on, we could expect further upside move in SBI toward the levels of 965 to 975 zone. So overall trend looks promising, and further upside is expected in SBI toward the levels of 965 to 975 with the stop loss of 905 on the downside.
All right, so 965 and beyond that levels are expected. So it's a hold out there in SBI. But then let's move on. And Sharmila, this question is from Yogesh from Bangalore, and he wants to know about Praj Industries. He's holding it at the price of 430. He wants to understand the time frame that he can allot to this particular counter.
So for me, this counter is a clear hold. Just now the valuations look a little expensive, but the way their business is, as well as everything that we have going on around ethanol, etc., makes this a good company to be invested in for the long term. So for me, it's a hold.
All right, that's the take coming in on Praj Industries. But we have the next live caller with us. We have Sushil on the phone line. Hi, morning. Go on. We have Lakshmikant and Sharmila to help you better.
Yeah, I'm holding FDC shares, around 900 shares. This share is recommended time and again by the investment consultants also. But the share is, I purchased around 460 rupees. It goes 500 rupees, 510 rupees, and again comes back to 430, 440. So this happened 2 times. So though I am a long-term investor, but I'm quite worried that why this is movement of 60 rupees in just 1 or 2 days. Again, it comes to around 440, 430. And this is happening for last 6 months. This movement is 3 times. Thank you.
All right, but seems to be consolidating in a bit of a range. But are you looking for a short-term bet out here, or you are ready to hold it for a long term?
I can hold it. I'm holding it, but my point is that 500 rupees to 430 within 2 days. It's like this movement is 2 times or 3 times. So
Understand.
is it some speculation or is investment good investment and continue to hold 1,000 shares
No,
for a long
understand.
period?
You can hold it, but Sharmila, any thoughts here? FTC, one of the pharma companies here, seem to be consolidating, but do you believe it has a good growth trajectory which can support the stock as well?
So I can't answer the specific question because I understand what he's saying, that this kind of a sharp price movement, given the numbers of the company and what generally what the company doesn't really seem justified. I don't really have an answer to that. But from a purely valuation perspective, it is even at this level, it is to my mind a little expensive. So it might correct a little bit from here. Having said that, it's not a bad company to hold on to if you're long term. But I agree, this kind of price movement of 50 rupees is a little puzzling, and maybe there was maybe some dividend, or it was reacting to bad numbers or bad news or something like that. Otherwise, it's very difficult to explain.
All right, but Lakshmikant, your thoughts here seems to have wild moves, but what are the charts telling you?
After a few days of decline, FDSE has found some sort of stability near the levels of 430 mark, and from there it has also made a bullish kind of formation. But still, resistance remain intact near the levels of 465 to 470 zone. So that would be the strong hurdle for the FDSE Limited. For gaining upside move, it need to cross this hurdle. Otherwise, it will consolidate within the band of 430 to 470. In case if it reaches the levels of 430, then further selling pressure could be expected. In that case, it could fall lower toward the levels of 410 to 400 zone.
All right, so that's a call on FTC, but then it's time for a short break, and post that.
Welcome back to Buy Now Sell Now show, where we get you answers for all your stock related queries. And continuing the same, we have our next live caller with us on the phone line. Joining us is Vijay from Chennai. Hi, good morning, and go ahead, ask your query.
Hi, good morning to all. My query is regarding automobile sector. I'm looking to do a fresh entry with Hyundai Motors. I just wanted to know, is this the right time to get in for a period of 1 year? Because I'm trying to diversify my portfolio. I haven't had automobile sector in my portfolio yet. The other automobile company seems the valuations are slightly high. So Hyundai looks promising. So I just wanted to know the view on this for a period of 1 year.
The best one to answer this is Sharmila on the valuation front. But Sharmila, the fact of the matter is that post that GST announcement, there's already a lot of excitement in the stock. The results are due today. What's your outlook? Wait out for some more time, or go ahead and one can still make purchases in Hyundai Motors given the valuations right now, and can still hold it for the next 1 year?
So I don't think that there's any taking away from the fact that it can correct a little more from this price. So maybe for an entry point, we can take a technical view. Yes, I do agree with the broad thesis that because of the GST cut, because of the fact that passenger vehicle has been a bit, it's sort of been it's not really, we've not really seen great numbers from there. And hopefully after this GST cut, we've already actually started seeing that during the festive season, and they will only build on those numbers. And within the passenger vehicle space, yes, I think Hyundai Motors is quite nicely poised. So from that point of view, I don't really see any problem with Hyundai Motors at this, even at this price. But since he hasn't bought, and I do think that the stock can correct a little bit from here. So maybe we can get an entry level from as a technical viewpoint. But I agree, as a stock, he can look to buy it for a year.
All right, so for a year, it's a buy Hyundai Motors. Let's move on and let's take Sharmishta Malik's question, and she's writing from Kolkata. Lakshmikant, she wants to know if it's the right time to buy Infosys, and what's the price that she should be looking at?
See, Infosys still struggling hard to surpass its 200 SMA levels, which is placed around the zone of 1600 levels. And the stock has found some sort of stability near the zone of 1480 to 470 zone. But still, I think one should wait for this breakout. Once it crosses this level of 1600, I think then after we will see a further upside move. Otherwise, it will take a longer time in the consolidation, and we won't see any further upside move until we see any breakthrough of the levels of 1600. However, on the downside, I think the levels of 1430 to 1420 will provide support. So I'm expecting range bound move until it will clear this hurdle of 1600 on the upside.
All right, that's the take coming in on Infosys. Let's watch out for that. With Sharmila, the next query is coming in on HDFC AMC. Just yesterday, we have seen that massive fall across the AMC counters. And Ram from Andhra Pradesh has been holding 10 shares. His average buy price is 4,050 rupees. Good to know that he's still sitting at profit. What to do with this particular counter? Good for the long term, or can exit the stock at this price point?
So, I mean, given the news development, perhaps you could see a further correction on the AMC stocks, because if their expense ratios are going to get impacted going ahead, which is what SEBI seems to suggest, then yes, their profitability will be hit. Having said that, what we also need to, if you're a long-term investor, what you also need to bear in mind is that this whole argument for buying anything related to capital markets is the fact that our market is expanding. People are investing more in equities, and within that space, mutual funds, we are seeing, the way their AUMs are going up. And in that space, again, HDFC AMC is a very good name. One of the biggest funds that we have in the country, among the top 5. So I don't really see any concern from that. But yes, given the news development, the stock could correct a little more.
All right, so that's a take on HDFC AMC also. But then with that, it's a wrap on the show as well. Thank you so much, Sharmila and Lakshmikant, for being on the show and helping our viewers with their stock-related questions. And for our viewers, you keep writing us in on our WhatsApp number. Keep sending us your stock-specific questions. But then till then, it's a goodbye from me and Srishti. But then you stay on ET Now.